I've been trading for 7 years, and for most of that time, I struggled and wasn't consistently profitable. But recently, something clicked, and my trading started to change. So what's happening, my people? It's your boy Ron, and on this channel, we like to be transparent, we like to be clear, and we like to break down real simple trades, right? In today's video, I want to break down my journey in the market, how I started, how I've gotten to where I am now, and as well as I want to go over a trade that I took this Friday. So stay tuned for that. So let's get it started, man. I started trading around 7 years ago, in 2019, and let's just say the journey has been ups and downs, lefts and rights. I got started through actually my brother. He joined a company called IML. I know everybody's kind of familiar with IML, and we started trading in the forex market. Now, I was never into the marketing side of the IML thing. I always seen it for kind of what it was, but I did want to learn and study the craft of being able to, how they hyped it up, make money on your phone and make money on the internet. Um, so I really dived into it. I got deep into it, and I had that beginner's luck at the beginning. I took a $150 account and I blew it up to around $1,300 to $1,500, and I lost all that money in a matter of 1 or 2 days. From you know the old not putting a stop loss on your trade, being greedy, over leveraging, things like that. Um, and it was a very valuable learning process. It made me sick to my stomach. I can remember it vividly, being in the bed, just watching the money just go away. And it let me know that this was real. There's a real possibility of making money, but you could also get real hurt in the market, and lose a lot of money. So I started diving in deeper, trying to learn more and more. I've I've took and learned so many different strategies. I've been in support and resistance, moving averages, bounce plays, um, you name it, man. I pretty much studied everything. I studied some indicators, the RSI, um, Bollinger Bands, all of these things. And through the process, I feel like that was very important because I also state that when you're learning something, it takes time, right? You need time in development. You need time to understand what works for you and what doesn't work for you. But an important thing is to make whatever you're learning yours. Okay, that was a big change on what kind of started this shift for me. Um, a lot of people have too many indicators. They overtrade. You chase setups. You revenge trade. You lose a trade. You want to hop right back in. And these was all the things that I was going through as well. I think majority of traders do go through these things, right? But the thing that finally changed for me, and made me better in the market was me just honing in on a process, learning something, and sticking with it, making it my own, catering it to me, and seeing it on the charts on a consistent basis. Chart time is very important. You have to spend time in this, right? Like I just said, doctors go to school for 8 years before they get the opportunity to actually work on a patient and things like that. So, other people get the degrees for 4 years. So it takes time. This is a science, and the journey, everybody's journey is different. My journey personally probably took a little longer because it's not like I have a singular focus on just trading. I also got a 9 to 5 that pays my bills, right? So, yeah, man, the big thing I feel like that changed my trading was me honing in on my process, having better risk management, not over leveraging, not risking to the point where I feel uncomfortable with the amount of money I'm gonna lose, even though my account says I can take that loss. You got to stick in your in your bucket, right? If you can only in your heart feel like $100 is the amount that you're willing to lose, man, stick with that $100. Don't try to go up and risk 500 because you know you can make 500 or 750 or 1,000, depending on what your risk to reward ratio is, right? So that's one thing I say. Stay in your lane. Focus on your journey. Risk what you're comfortable losing, because if you don't, you won't let your trades hit your stop loss. Instead, you'll close them early, and then you'll have this thing where in the market where it gets close to your stop loss and then goes in your favor, and now you're feeling sick to your stomach, and that creates revenge trading, or that creates the FOMO. Uh, so that's one thing. Also, another thing that I do now is top down analysis. I have a process where I start from the daily, I go to the 15, and then down to the 1 minute. And this is my process. This is what I honed in on. This is what I like to do, and I'll show you that when I take the trade, or when I show you the trade from Friday. I had to simplify my strategy for my liking. So I do trade ICT concepts for the most part. There's a few other things that I look at. It's like as far as the 200 moving average, as well as the 21 moving average. These are extra confluences in my trading. But I had to simplify it and boil it down to what I want to see, what are my key levels, and the main key level I focus on is fair value gaps, and then on my entries I focus on order blocks. So that is pretty much the main thing that I like to focus on. But I had to learn everything so I could know what I liked and what I could see in the market, right? So like I said before, it takes time. It takes chart time, it takes back testing, it takes forward testing, and it's a process, right? And so the last thing I would say that helped my trading tremendously is being patient and waiting for the setup, right? You have to be selective on your setups. You're going to see so many setups on a day-to-day basis, especially trading the way I trade. I trade an entry time frame of 1 minute, right? And my structure time frame is really the 15 minute. So you may not see as many, but if you scale down and you try to go into these lower time frames and stick on the 1 minute, you'll see setups all day repeatedly. I had to scale back. I take one, maximum two trades a day, and I'm super selective, I'm super patient, and I'm super decisive when I do see the trade that I like, right? I know pretty soon right away it's like, okay, I'm gonna stay out of this one. And I have to be okay with staying out trades and seeing them win and not have a fear of missing out, that FOMO effect. Or I have to be okay, staying out the trade and then watching it play out in a loss, and then I can't get too excited about that either. Like, oh yeah, I saved my money, I know what I'm doing. So it's all a process. There's a lot of little things you have to work on. Another big thing you have to work on is yourself, mastery of self, trying to be better in your everyday life as well. That can help you in trading. But without further ado, let's get into the market and let's look at the trade that I took on Friday. Okay, so I want to make this quick. First things first, we got to have our process set in place. So me, I trade from 9:20 to 12 o'clock on a day-to-day basis, okay? Really, Monday through Friday. I do choose times where, or days where I feel like I need a break just based off of how I'm feeling. But when I do trade, it's from 9:20 to 12 o'clock. First things first. Secondly, I like to start off on the daily time frame. Like I said, I'm a top-down analysis type of guy. And the first thing I do is I mark out my previous day's high and low. So we're going to be discussing Friday, March 13th, 2026. So the previous day for that would be March 12th, 2026. Okay, that Thursday. All right. And then the next thing I like to do on my daily chart is to mark out my relevant swings that haven't been tapped into yet. Okay, so these are the two closest. This is close as well, but these is relative equals. So if we take out this swing high, then most likely we're going to take out that as well. Okay. Third thing I like to do is once I have these drawn up on my chart, I like to scale down to my 15-minute time frame. Okay, I'm a reactionary trader. I look for moves that happen off of reactions to my key levels that I like to look at. The main key levels I like to look at will be the fair value gap and swing highs and lows. Then I also look at supply and demand as well from time to time. But now let's go into the 15-minute time frame. All right, so on the 15-minute time frame, this is what we can see. We see that at 9:30 price opened here, and we swept out these swing lows as well as tapped into this fair value gap. Now, this actually looks like a pretty decent setup. If we scale down to the 1-minute time frame, we probably could have found an order block to continue higher and actually win some money off this trade. But I don't like to trade right when the market opens. I kind of like to give it around 10 to 15 minutes before I even actually look at taking a trade. So I usually take a trade kind of after 9:40, 9:45-ish. All right. So as we can see, price expanded up. We created this fair value gap, right? And then we also created this reversal candle here at 9:45, but that still left this fair value gap open. So first thing I'm thinking is, okay, we possibly could continue higher in this moment, right? We could continue higher to the previous day's high. All right, it just depends on how we react off of this fair value gap, right? But what we end up doing was we closed below that fair value gap here. So once that happens, that fair value gap is no longer important to me. All right, it's obsolete. The next levels I start to look at is, okay, we have a demand here, and then we have a swing low here. All right, how are we going to react off of these levels? Okay, so after this candle closed, this next candle, this 10:15 candle, let's get a little closer here. We created this indecision candle, leaving us with a fair value gap right here. All right, so this is what I know. We have a fair value gap going higher, right above the midpoint of yesterday, which is this black line. Now these midpoints, the previous day's midpoint, high and low, are very important levels, right? They are reactionary. Price tells you a lot of times what it's going to do off of these levels. And you can see, if you just go through it, you can see we had a nice reaction here. We went higher. Then we shot down below it. We shot down below it. Then we closed above it here. And then you see we use it as support to continue higher. Then we come up here to the midpoint. We have a nice reaction off it. We go above it. We try to go higher than the midpoint. And then we reverse off of it. So they're very important levels that I would recommend putting on your chart. So we have a fair value gap going higher, and then we have a fair value gap going lower. This is a common reversal pattern. So once this happens, I'm waiting for price to come up here into this fair value gap. All right, and then you can also see what's else lined up with that fair value gap. That 200 moving average. It's another reactionary indicator that I like to use. So the only two indicators that I really use are the 21 moving average and the 200 moving average. It's a little sauce. All right, so once we get into the fair value gap, I like to scale down to the 1-minute time frame. And now I need to see, where are my order blocks? What order block can I look to take a trade off of to get on side with the market? All right, So as you can see here, price is going up with these series of up candles, these two series of up candles here. And then we reverse. It's the same pattern that you've seen on the 15-minute, a nice reversal. So we had a fair value gap going higher into the fair value gap, the 15-minute fair value gap, with a fair value gap going lower. All right, so we reversed here, and once we get this candle closure here, then we have now formed our bearish order block. We need the series of up candles that went and took out liquidity or went into our key level. Once we close below it, that creates our order block. All right, so normally I would enter the market in as soon as that happens. As soon as that happens, I will enter the market like that and try to go for 1.9 R. But in this case, I didn't like the fact that we had an 85 point stop loss. It's a little too large for my liking. I like to stay under 70 points. 70 points is a large stop loss as well. So I waited for price to come back up into the order block. All right, so once price tapped the order block, that's when I entered right here when it tapped that level. And I had my stop loss above that high at 54 points. And then so I went for the first take profit at that swing low that I was telling you about before, like where I said it was a possibility of liquidity line there. That just made most sense to me. So once I touched that swing low, I then moved my stop loss down to break even, right? And then I went for the rest of the 1.9 R. Let me put that back up so I can know. Yeah, so my final target was 102 points, which was a 1.9 R, or so it's risk to reward ratio. So it would be a 1 to 1.9 risk to reward ratio. I like to say 1.9 R because I read this book called Trade Your Way to Financial Freedom, and it's just how they broke it down. So you see the risk to reward ratio right there, 1.9 R, and that was the trade. All right, let's say price didn't come back up into my zone, into this original order block, we could look for a continuation play as well. So here we have a fair value gap, right? We came back up into that fair value gap. We respected the fair value gap by not closing in it, right? By not closing above it. I'm sorry, we wicked above it, but we didn't close above it. And then this is a continuation order block. Okay, so I could have also took another trade here. This one is a little more riskier because we're taking a trade right into that 15-minute swing low. But at the end of the day, it's all probabilities. It's always going to be a risk. You just need to position yourself accordingly. Okay, if it's more riskier, maybe I need to scale back on the amount of money that I'm going to risk. All right, but you know, that's a little more extra sauce. The key point of this video is, you know, the biggest shift for me was really making my strategy my own. You know, having that patience and, you know, being decisive on what I see. Having a plan. A plan is very important. Setting up your process of when you're going to be in the markets and when you're not. All of these little things add up to becoming more consistently profitable. You know, so if you're on the same trading journey as me, man, and you want to become a better trader, subscribe and follow along. You know, I'll be documenting my wins, my losses, and, you know, and I'll be telling you the lessons, and I'll be having a lot of different little nuggets in these videos. So that's all I got for this video. It's your boy Rome. I'm out.